Hi everyone. No video today for some reason. My computer just doesn't want to play. But I've got a few slides here anyway, so you don't have to see my face. And it's about inflation. And I just want to say a few things, given we're at the end of pretty much at the end of hiking cycles, and to have a look at the outlook, considering what's going on in fixed income and other markets at the moment. First thing to say is that what's happened with regard to inflation over the course of the past 2 years has been pretty exceptional. As you can see here, this is a chart of US core CPI year on year going back into the mid 90s. And I mean, core CPI has been pretty flat over that period, somewhere between 2.5%, I would say. More recently, it's been a bit lower than that. And then suddenly, after the pandemic, we saw this huge move up to 5, 6, 7%, which we're only climbing down from now. And I mean, even at the time of high inflation before the previous recession in 2008, core wasn't really affected. That was purely a headline issue. This is quite something else, I would say. Something has changed. And this has an effect on markets. Now, this is the 10-year break even on TIPS. And clearly the move is somewhat smaller than it has been in the headline inflation, but you can just about see it here. Over the course of the past 20 years these bonds have existed, break-even inflation outside times of crisis has tended to between 2 and 2.5%, a bit lower over the course of the past decade, and clearly some spikes lower at the time of the Great Recession and also the start of the COVID pandemic. But again, we're seeing some very high levels of break-even inflation here. Now, clearly, if this was a 2-year or a 5-year break-even, it would have gone a lot higher than this. 10-year is more a longer-term inflation expectations. But the main thing is that has mostly normalized over the course of the past year. And we can have a look at the way that inflation prints come out. And this is just my way of doing it. It's basically a 6-month sum of how inflation comes out relative to how it normally comes out for a particular month. And you can see that over the course of the past couple of years, these monthly prints have been significantly in excess of where they were over the course of the past 20 years of averages or something like that. This shouldn't be a surprise to you. This is basically what we've been seeing in the inflation data itself. But the main point here is that these monthly prints are accruing lower and lower and lower now, and they are heading down. For example, the August print we just had was a nice, pretty flat surprise. Inflation is trending back to 2.5–3% levels in core. Similar things happening in the Eurozone. We can look at different areas. This is essentially the same thing, but with just different data. Again, we get a big uplift in inflation. In Europe, it's a bit later. It starts really at the beginning of 2022 with the Russian invasion in Ukraine, and therefore it's finishing later as well. But again, it's starting to roll over, and these numbers are starting to fall. If we move to the UK has been the laggard, I would say, at a global level. Again, a very similar story to Europe. A big rise in inflation results over the course of 2022, and then we had this little spike at the beginning of this year. But I mean, you can see why I waited until today to put this out. We had a very low print today, and that bodes well for the future. I would say what's happened in UK CPI has been out of line with all the other markets, and we should see a quick renormalization of that. And this print is pretty much the first one in that process. So there was a bit of excitement yesterday about the number out of Canada. The headline inflation number went back above 4%. But core, and this is core again, as of all of these charts been, core really doesn't really show a great deal here. We had a big spike in Canada, pretty much in time with the spike in the US. And since then, inflation has actually come up pretty significantly in Canada. Canada is ahead of the pack in terms of disinflation. And the little blip that we've seen over the course of the past month, that's nothing to worry about. That's just a one-off and is pretty much against the trend in Canada and also pretty much everywhere else as well. The only place where inflation is doing interesting things on the upside is Japan. Unsurprising, they were latest to the party, and of course, Bank of Japan are still easing monetary policy. So, this trend higher in core inflation results has yet to stop. That this peak, by the way, in 2014 was a result of a large increase in mobile phone tariffs, I think. So there's no real comparison here. Again, Japan, like with pretty much everywhere else, is seeing this for the first time and in size. But of course, in Japan, headline inflation prints are still 2 or 3% or something like that because the historicals are so low. So the conclusions here of this presentation, I don't think there's anything to worry about near term in terms of inflation. People have been getting quite excited about the run up in oil prices recently. That may be happening and certainly is included in the numbers, but it's being offset by other stuff. I really don't think that this is the start of a new spike in inflation. Probably more importantly is what happens next cycle in terms of inflation, whether we're going to go down to 2 or to 3 or to 4. We don't really know that right now. We don't really know how inflation is going to behave further out or whether something has particularly changed. But for right now, economies are slowing. Central banks are going to be moving on hold and then probably easing after that. And the question is, well, how low can inflation get before it starts to rise again in the next cycle? This is good news for fixed income, certainly for the front end of yield curves, where central banks should start to focus on the downside in terms of economic activity. And you can extrapolate that over the course of other assets as well. I don't think there's really a currency story here. It's maybe an equity story if we start to see some dovishness from central banks, but this is mostly about fixed income and mostly about the front end of yield curves. Thank you very much.